going on, everyone? Today we have to talk about Bitcoin here. As you can see, everything is going in the favor of the markets, currently at 6% in the last 24 hours. So that's pretty big. I want to talk about where I think this is going to go from here. And this actually might have the strength to continue the uptrend higher and higher. So we're going to talk about that. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. So as you can see here with the prices that I mentioned before, we pretty much just broke out of this symmetrical triangle here. So in my previous video, I was talking about these symmetrical triangles, and when you have them, you typically break out to the downside. So as you can see here, it's supposed to, and it's like a 54% chance that it does, but it doesn't always do that. And that's why I mentioned in my video yesterday and the days before that there's always the possibility of that breakout there, even though it has the bearish structure to continue downwards. But anyways, we have broken downwards or broken upwards here above. So I think once we get past this level here, past 94K, that's going to be the next stretch from 94K all the way up to 100K, which will be the next 6% stretch. So that next 6% gap, if we feel that, we are good to go. So what I mean is, if we break past 94K and we clear this 6% gap between 94K and 100K and successfully get above that 6% gap, I think we will be bullish for the time being, right? I think we'll be bullish heading into next year, and we'll just be in a good space, right? If that happens. If it doesn't happen, then I don't know what to tell you, right? But anyways, the percent R trend exhaustion is pretty overbought here. There is a possibility of another pullback coming sometime up here. So I would say be careful there. There could be a pullback at any given time, especially with the way things are looking now. Also, another thing, the crypto fear and greed index is at 22 right now. So the crypto fear and greed index has been going up. So people are less fearful than before. They're not extremely fearful, but they're still fearful. And not only that, the Fed has just done what they call, well, they haven't done it yet, but they have gotten rid of quantitative tightening, which means next they should start quantitative easing. So pretty much what the process here is decreasing the money supply by selling securities from the central bank's balance sheet. This is the opposite of quantitative easing, which involves increasing the money supply by purchasing securities. And this is such a good thing that they've ended quantitative tightening, because they're no longer going to be selling those securities. They're no longer going to be selling those. So for instance, the stock market is not going to continue to go down as it is. And the crypto market, remember, there's a lot of crypto treasuries out there as well. So this is a good thing for the markets altogether. That's pretty much why we had what just now happened. If the Fed didn't do that, we actually probably would have broken down right here, because when I was making the video yesterday, it was right here at this point. And then the Fed had their meeting, and boom, they did it. They did the quantitative tightening, and everything just started to pump from there. But if they did not announce that during that meeting, we probably would have seen the downtrend continue, right? And that's the only reason that we started to go up yesterday. That's the only reason. So you got to be extremely careful, because remember, just because they got rid of quantitative tightening doesn't necessarily mean that they're going to do quantitative easing yet. They might do it in the future, maybe towards December, but they're not. Well, it is December, but maybe like January next year, I don't know. But as of right now, they're not doing quantitative easing. So, they've stopped selling, right? And they stopped putting securities on the market, but they have not quite yet decided to do the easing part. So this is, definitely important for the markets. And even though it might seem like it's not important for Bitcoin, everything is following the same structure. The S&P 500 is going up at the same time. Everything's following, right? Everything's following suit. Look at Tesla. Look at all the stocks out there. Just look at all the cryptos and the stocks. They're all following the same direction. So it's really nothing that you can say about that. But like I was saying before, we do need to see a push from past 100K for me to completely be bullish here. But yeah, I think right now things are looking pretty bullish. So if we push past 100K here, then I would say that is a confirmation that we need, right? But anyways, and also you can see we had a double bottom over here, and then we continued downward. So that's a strong support area. So it's going to be strong resistance for us as well. So I would say if we do get past 100K, we might see an immediate rise to like 106, 108K. So that would be a pretty fast pump there. And everything's been moving up a lot. I mean, it's up 10% since yesterday. So it's, it's definitely crazy. Anyways, coming over here, we can look at the daily chart as well. So the daily chart is showing us down here, the percent R trend exhaustion is currently in an uptrend, both the short-term trend here and the long-term trend. So we want to see that continuing to rise. If we see any type of pullbacks here, just know that the price is going to pull back. So you definitely would want to be aware of that. A lot of good buying pressure on the MACD, so that's pretty good as well. And then when we have the weekly chart, this is very important. Look at that. This is what I've been waiting for with the percent R trend exhaustion. I've been tracking this since June of June of this year. I've been tracking this since I really do think it was before June, but I'm gonna just say June. I've been tracking it since June, and yeah, it's been going pretty well now, because now we're seeing that we're doing a reversal here. So if we actually complete this reversal, then we might actually do what I thought that we would do in the first place. And that would be reaching all-time highs at the top of our bearish expanding triangle. But remember, we broke out of the bearish expanding triangle downwards because Trump did his whole thing with China, caused everything to drop. But now look, we're coming back into this bearish expanding triangle. If we do that and we come back into here, I think still by all the way over here in February of next year, we could quite possibly be at 150K Bitcoin. 150K. That's going to be a huge run up. But not only that, altcoins are going to run up too. So I'm going to talk about that in my other videos, but I'm going to keep this one strictly Bitcoin. So yeah, everything is going to run up. If this is the case, we're going to see altcoins and Bitcoin running up. So keep your eyes on this here, the percent R trend exhaustion on the weekly chart. And also keep your eyes on the Bitcoin chart for the 4-hour chart. So when you come over here, you look at the 4-hour chart, keep your eyes on the shorter time frames too. We don't want to see a huge pullback from here, right? We don't want to see a huge pullback. We want to see it staying overbought for longer than necessary. We want it to be overbought for the next week. We want to stay overbought, right? Because if it doesn't happen like that, then you're going to see a nasty pullback. But nothing goes straight up, so you'll probably see a nasty pullback in the first place. But yeah, this is pretty much all I got for you guys today, though. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. And as always, I'll be back with another video.